Welcome to the Banker Lamp. Please enjoy the video.
In this video, I will explain how to file estimated tax returns. First, understand who needs to pay. If you earn income not subject to withholding, like from self-employment, investments, or rental properties, you likely need to pay estimated taxes. This ensures you pay income tax and self-employment tax throughout the year. Generally, you must pay estimated tax if you expect to owe at least $1,000 in tax. Next, let's calculate your estimated tax. You'll need to estimate your total income, deductions, and credits for the entire year. The IRS provides Form 1040-ES, Estimated Tax for Individuals, which includes a helpful worksheet. This worksheet guides you through the calculation process. A good strategy is to base your estimate on your previous year's tax liability to help avoid any underpayment penalties. Now, let's talk about how and when to pay. Estimated taxes are typically paid in 4 equal installments throughout the year. You can pay electronically through the IRS website, by phone, or by mail using payment vouchers from Form 1040-ES. Remember, the payment deadlines are usually April 15th, June 15th, September 15th, and January 15th of the following year. Mark these dates on your calendar. Finally, let's discuss avoiding penalties. To avoid underpayment penalties, you generally need to pay at least 90% of your current year's tax liability. Another safe harbor is to pay 100% of your prior year's tax liability, or 110% if your adjusted gross income was over $150,000. Remember to check the description for a link to Darn Tough Socks and other great deals. Filing estimated taxes correctly helps you stay compliant and avoid surprises.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.